Good morning. It's quite noticeable that officials around the world are talking more and more about exchange rates. Recently, of course, Japan's been in the spotlight, but yesterday, Swedish Riksbank Deputy Governor Lars Svensson said Swedish policy needs to be set to allow inflation to overshoot their target, as high unemployment risks becoming impermanent in the Swedish economy. Experience shows that the krona would be a bit weaker and that export companies would manage better, he said, making an explicit call for a competitive devaluation. That's not the kind of thing central bankers usually say. His comments highlight how central banks are gradually moving away from focusing on fighting inflation and undertaking a new role as unemployment fighters. That risks changing central banking into a zero-sum game where one country's success in boosting output comes at the expense of other countries' jobs. The first deputy chairman of Russia's central bank, whose name I won't even try to pronounce, said yesterday that we're on the threshold of a very serious confrontational actions in the sphere that is known as currency wars. Now, Britain is likely to be a willing participant in any such a war. So far, the Bank of England hasn't done as much as other central banks in the way of extraordinary measures, but soon the Grey Lady of Threadneedle Street will get a new governor with some radical ideas about targeting nominal GDP and not inflation. Plus, the Chancellor has shown that he's willing to discuss abandoning inflation targets, which the bank hasn't hit for some time anyway. At the same time, policymakers have been citing poor exports as one of the key reasons for the UK economy's underperformance. As the currency wars heat up, we expect the UK to become an active belligerent and for the pound to suffer as a result. We recommend being short cable, short sterling against the dollar on a medium-term view. This is Marshall Gittler, head of Global FX Strategy for IronFX, wishing you solid trading.